In this beginner-friendly tutorial, I'll show you how to build your very own trend squeeze indicator. This indicator is useful to find the very best squeeze setups in places where you have a healthy trend. I think a picture's worth 1,000 words, so let me show you an example of what we're going to be building. Here's a screenshot of the S&P 500 on the daily time frame chart. The first thing we're going to look for is a healthy trend. To define a healthy trend, we'll be using stacked exponential moving averages in combination with simple moving averages. So that's the first step. You'll learn how to integrate moving averages into your code. The second step that we'll look for is looking for pullbacks. After we find pullbacks, we'll find our first set of entries, and we need to find a way to ride out this chop and instead wait for momentum to shift. The other condition we'll add is we want to wait for a squeeze. I'll be using the TTM squeeze indicator, this is built inside of thinkorswim, as part of this tutorial. After we find that the squeeze is forming, we have a healthy trend, we have all of our conditions being met that we're going to add in, we're going to check for momentum to shift, and after that happens, that will be where our actual arrow plots. That's where we will see our trend squeeze entry, and the whole idea is to ride out the momentum. For all of our Volatility Box members, I have a special part 2 of this tutorial that's going to be coming out soon. In part 2, we're going to take the code that we built, we're going to layer on the triple squeeze instead to find more setups, and we're going to turn that into a robust backtester that actually helps us build some confidence. It helps us eliminate good setups and bad setups on any time frame that you want. So let's take the S&P 500 for example. We use the same daily time frame 5 years. And now I'm going to actually measure the setup that we were just looking at, the screenshot I showed you. Now the setup that I'm first testing is the trend exit. This is a special setup that I've added in for this specific backtester. The trend exit tries to ride out the trend for as long as possible. So you have trades like this one, which returns for 7%, but you also have trades like this one, which are some quick losers. This strategy, 10 winners, 4 losers over the past 5 years. You'll notice that each loser is more contained. The average winner is much greater than the average loser. So 10 out of 4, I think that's pretty good. Now say you wanted to test a different exit here. Instead of riding out the trend, maybe you just want to get out when the squeeze actually fires. You could test that out. Here you see that we get 1 additional winner, but you're able to eliminate 3 losers here, which might be something that aligns better for your trading style. You can also test different time frames. So if I was to come into the weekly time frame, for example, you'll notice that the same win rate carries across, but here you're able to get a little bit more in terms of your actual winner. In part 2, I'll also show you how to build scans so you can actually identify where you have setups like this one setting up to date that you can actually run and backtest. Now I know some of you like to download the indicator to follow along with the tutorial. So I do have the code already uploaded on our website. It's a free download, and you can download the trend squeeze indicator if you'd like to follow along with this tutorial. For all of our Volatility Box members, even though the actual tutorial for part 2 is not released, the Trend Squeeze Pro indicator, the backtester, and the scans have all already been uploaded and are part of the Squeeze course downloads. To download these tools, simply come into tosindicators.com/squeeze course. Make sure you're logged in with your Volatility Box membership, and once you go inside of the course, the download link will now have these 3 additional downloads attached to it. If you're not a Volatility Box member, I'd highly recommend checking out our membership. We have both the futures and a stock Volatility Box membership. Gives you access to our volatility models, which we update every single week. The Volatility Box membership also includes access to all of our pro tutorials free of charge. Everything is all inclusive. This includes the entire squeeze course. I just gave you a preview of that. You can check it out further, but it includes all of the modules. There's now 19 modules available. Includes other indicators as well that we've built, including the wheel options calculator, along with other backtesters that I think are just really useful in learning how to make the most of thinkorswim, along with actually adding something useful to your thinkorswim trading arsenal. Now for this tutorial, here's the coding process that I'm going to follow, quickly going through it. We'll start with coding the trend conditions, then we'll integrate the TTM squeeze, then I want to find ways to eliminate the chop and focus on when the trend is beginning, and finally clean up the code, add in some bells and whistles, maybe even ways to turn the squeeze on and off so you can use this as a standalone trend indicator as well. And basically make this indicator just a really nice, fun to use indicator that's actually powerful and provides useful information. For all Volatility Box members, the part 2 is going to be releasing soon to this tutorial, but all of the tools are already available, and I'll leave a link to the squeeze course in the description box below. Again, if you're not a Volatility Box member, be sure to check it out. All of these are included for free with the Volatility Box membership. All right, let's jump into Thinkorswim and start building our trend squeeze indicator. To get started, I'm going to remove all of the code that we currently have on our chart, and I'm going to come into the daily time frame first, and this is the chart we'll use to build the indicator. Now the first thing I need to do is click the studies icon right up here. Once I click the studies icon, I can then click create to start writing our very own code. Delete everything that we have inside and give this indicator a name. I'll call mine TI_trend squeeze. Now the first thing that I can do here is I can bring in our exponential moving averages that we're going to need to define what we call a healthy trend. Now, the hashtag is a way that we can add comments. And the way I'll define a healthy trend is, let's say, places where we have the 3 EMA is greater than the 8 EMA, which is greater than the 21 EMA, which is greater than the 34 EMA, which is greater than the 50 SMA, which is greater than the 200 SMA. This is the chain link that I want to follow. First thing I need to actually do is define these EMAs. So let's go ahead and do that. I'll say EMA 3 is equal to, and here we can call the handy dandy exponential average function, which takes in 2 parameters. The first is the type of price, which for us is the closing price, and the second is the length, which is the number 3 for the 3 EMA. I can copy this, paste this one more time, change this to 8 for the 8 EMA, and like that, I can copy paste this 1 and 2 more times for the EMA values that we have. So we have the 8, 21, 34, and I can update the links here as well. After we do that, we can bring in our simple moving average. The function for this is a little bit different. So here I can say SMA 50, and I can use simple moving average, close 50, and that's the function, simple moving average. And I can repeat that for the 200, close 200. And if you're wondering where would you find these different functions, you can find all of them defined inside here, inside of the functions. Technical analysis will allow you to find some of the other ones. You can also explore this inside of math, options, functions, etc. if you want to explore that. Okay, now we need to define our trend check variable. So here what I'm going to do is say EMA 3 is greater than EMA 8, and EMA 8 is greater than EMA 21, and EMA 21 is greater than EMA 34, and EMA 34 is greater than SMA 50, and SMA 50 is greater than SMA 200. And we can add in bull trend check, and then I can simply copy this and paste this for our bearish side. So I'll say bear trend check, and then I can reverse these signs to check to make sure that we have the moving averages stacked bearishly. Now I like to test iteratively as we go forward here, so let's go ahead and actually, the first thing we can do is add in an input variable here, which says show MA, or show plots, or show, let's say show lines. And here we can set this equal to yes. And only when the user selects yes will we actually plot these EMAs. So now I can take all of these and I'll say plot EMA 3 plot, which is equal to EMA 3. And then EMA 3. And if I was to say EMA 3 plot dot set default color, and let's set EMA 3 to maybe pink. Let's see what we get here with just this code. Click apply. We can now see we have the 3-period exponential moving average plotting, and I don't actually have show lines plugged in, but let's go ahead and plug that in, where I'll say if show lines, then EMA3, else we'll say double dot nan, which is a way to say show nothing. And so now, if I was to say no here and click apply, you'll see that the EMA line disappears. So now I'll come back in to this code, and let's go ahead and repeat this for 8, 21, 34, 50, 200. So I can say plot now 8, EMA 8 plot. I'll change this to EMA 8 plot, and here we'll say EMA 8, and this we can make color dot, let's say cyan. Gonna repeat this for the 21, 21, 21, and I'll change all the colors at the end. Let's go through changing all the numbers first. So now we have the 34, the 34, and the 34. And then we have the two SMAs. So I'll say SMA 50 plot. If show lines, this will be SMA, SMA 50. And this is going to be SMA 50. And then finally, we have the SMA 200. And now I can come in and quickly change the colors here. So I'm going to make the 21. I'll make this one magenta. Let me just fix this real quick. And then I'll make the EMA 34 yellow. And then let's make the SMA 50 plot.set style. And this will allow us to make this dashed line. And then I'll repeat that for SMA 200. Curve.short hyphen dash, or short underscore dash, excuse me. And this should be SMA 200 plot. And then I can take SMA 200 plot here. And that should hopefully compile. Okay, so now let's test out all of our moving averages really quickly. And this should be color. Actually, let's make our 50 also yellow, but it'll be different because it's dashed. And then our 200 will be white. Click apply, apply. And now we have stacked moving averages that can easily be turned on and off from our code. So that's the first step. Now we need to actually create a stacked condition, and that is this one right here, our bull trend check and our bear trend check. So now that we have that, let's move on to step 2, in which we're going to be building our momentum check condition. And here I'm going to be using code similar to what we had inside of our momentum cross, where I'll say our bull momentum cross. And I like to use the 3 EMA with the 8. I think that's the most aggressive I'm willing to go. So all I simply check is if the EMA 3 is crossing above the EMA 8. And on the previous bar, EMA 3 was less than EMA 8, which is how I know that we actually crossed above on the current bar. EMA 3 is above that bar, and on the previous bar, we were below it. Now, similarly, I can say bear momentum cross, and here I can say EMA 3 is less than EMA 8 because we'd be looking for it to cross below. And on the previous bar, it was above, and that tells us that the 3 EMA has yet to cross below. So essentially, we're using the 3 and the 8 exponential moving averages crossing above and below one another to try and time what we would call our entry and exits. So let's actually see where just that simple condition happens. So I'll say add chart bubble, and we'll use bull momentum cross as our entry here, and I'll say we want to see this at the closing price, plot whatever that value is inside, and let's make the chart bubble yellow. It's a simple way to test, and anytime you see this one bubble, that's telling you that the 3 EMA is crossing above the 8 EMA. One simple way I know we can test this is by using our momentum cross indicator. It does the same thing, and you'll notice you see the blue dots whenever this happens. So we just coded that up in a fraction of a second. Now I can remove this. Now the next thing that we need to do is bring in our squeeze condition. To do that, we're going to need to reference the TTM squeeze indicator here. Now you'll notice the squeeze indicator has this plot called the squeeze alert, and that's what we're going to be using when we try and figure out if there is a squeeze or if there isn't a squeeze. So let's go ahead and bring this in. So I'll say def squeeze alert, and all we're going to check here is if the TTM underscore squeeze, and we're going to use whatever the default parameters are, and I'm going to check squeeze alert, and this is equal to 0. This is when we have a red dot. If it's 1, that's when we have a green dot. So we're going to check if the squeeze alert is equal to 0, then we'll return 1, else we'll return 0. So that tells us that there is a squeeze. Now let's see why. Whoops, we forgot to add in if. So now that I add that in, that code should compile. Okay, now that we have that, we can add in maybe actually that condition where we say, is the squeeze even required, or do you want to use this as a standalone trend indicator? So I'll say squeeze required, yes. And then now we can come back in and I'll say squeeze check. And here we'll say if squeeze required. So if the user has selected yes to squeeze required, and we actually have a squeeze, which this is going to return 1 only if we have a squeeze, then return 1. Else, if the user has said squeeze is not required, then simply return 1, because then we're not really performing the squeeze check. So just ignore it, return true, move on to whatever the next check might be. Else, return 0. Now let's see why this isn't compiling. What I have here, else, whoops, if. Okay, there we go. So now that we have that, let's test what we have. So I'm going to say bool signal, and all we need to do for bool signal is bring together all of the different conditions that we added in. So I'm going to say if we have our bool trend check variable being met, so I'll say if bool trend check, and we have our squeeze check that we just added in, and we have our bool momentum cross. And to make sure that we are still somewhat within that pullback region, I'm going to check to make sure that the low price is less than our EMA 8 price. And if all of these conditions are true, then we'll return 1. Else, we'll say double.nan. And the reason we're saying double.nan is because I'm going to plot this out as an arrow. So I'll say bool signal dot set painting strategy dot boolean arrow up. And let's make this set default color dot, let's say, I don't know, I'm running out of colors here. I'll use cyan for the time being. And then I'm going to create plot bear signal. And here this is going to be if bear trend check. And we're still looking for that same squeeze. And this time a bear momentum cross. And for our high price to be greater than EMA 8 to make sure we're still pulled back within the stacked region. And then we'll say else double.nan. And then I'm going to copy this code and copy bear signal. Make sure that this is bear signal. Bear signal. We'll change our color here to pink. And we need to make sure that our arrow is looking for an arrow down. And then let's also add in, I want to make sure that this stands out. So I'll say set line weight, and I'll set it to a weight of 3, so it's not too fat. Bear signal dot set line weight, and this just makes the arrow a little bit bigger so it's easier to see. And now let's give it a little drum roll before I click apply. Drum roll, and let's click apply, zoom out, and see what we're left with. So now on the daily time frame, when I have our squeeze condition triggered, you can see the arrows that are plotting. You have few arrows, but whenever they do plot, you'll notice that they're good for decent trades, and whenever they're not, you would know fairly quickly when that squeeze is going against you. It's not a perfect signal by any measure, but I do think that this is a very nice way to enter on almost any time frame. So you came into the 5-minute time frame. You could find all of the bull arrows, and you could find all of the bear arrows that plotted with, say, Friday's activity. Now, if you wanted to find more arrows here, let's use some of the functions that we added in as a user. So we can turn off the squeeze required condition. And now you'll notice that you have far more arrows plotting on your chart, which you can now use this as a standalone indicator, simply looking for when you have stacked moving averages, pull back into those moving averages, and then momentum directing you away from those actual moving averages. So very neat, simple indicator, but I hope you find just how powerful it is for a nice visual cue for something that I think most traders have to do manually. Now again, for all Volatility Box members, we're going to take this code here that we used, and we're going to use this as a starting point, and I'm going to translate that into this, which is a full-fledged backtester, which will then allow you to put some real numbers to this strategy and get a feel for how does it perform across whatever markets, across different time frames, across whatever trading styles you like to add in. And you can also test both the squeeze and no squeeze setups. And I think it'll be a nice way to actually get some real stats behind a strategy to find which market should you focus on and which market should you ignore. All right, you made it. That brings us to the end of this tutorial. Let's quickly summarize what we did in this tutorial. We started by adding in the trend conditions. Then we integrated the TTM squeeze along with finding ways to identify when this chop was ending and making sure that we were still pulling back somewhat within our stacked moving averages. We used the 8 EMA. We added in some bells and whistles, some nice ones like where we allowed the user to use this as a standalone indicator for trend trading, along with when you want to use this as a squeeze indicator for when the two are overlapping. Again, I'll leave a link to the download for the final version of the code in the description box below. And for all Volatility Box members, I've already uploaded the tools. Part 2, the actual tutorial, will be released next week, but the tools are already available for download on our Squeeze course website. And if you aren't a Volatility Box member, I think it's a no-brainer membership. Give it a go for 1 month. All of our premium tools are included for free with the Volatility Box membership, in addition to our actual models. Take care, everyone. Good luck trading, and I'll see you in our next update.